We are back on MorningLine, our final segment this morning, talking about stock market volatility. That's what we're suffering from right now, or experiencing anyway. It's pretty much around the world. Hank Parrott's with us, of course, a host of Retirement Report, investment counselor, financial strategies author. Good to have you on, sir. It's a pleasure. And we've got some folks waiting through the break. Let's get to the phone calls. And Taylor's always got good questions. Good morning, Taylor.
Good morning, Nick.
Hey,
good morning, Mr. Parrott. You do an excellent job.
Thank you, sir.
I know a lot of the information goes over folks' heads, and I can understand that. I've been in the market a long time and still learn something new every day, and I've been in and out of individual stocks, won and lost. So now I have just mutual funds, and that being Prime Cap and Vanguard funds. But now I'm intrigued, and I might say, I don't know exactly what week, month, or year, but there's going to be some good buying opportunities here for folks, but most folks will wait till the market jumps too high and then start investing. But again, I've found always some very good opportunities after having days and weeks like we're having now. But my question is, I've never bought these ETFs, but I'm intrigued by them, and especially by buying sectors, and I'm think at some point soon I'm going to be interested in both the financial ETFs and energy ETFs. And I just wanted to get your opinion on those. And I know there's plus and minuses, but I see some diversification within industries by buying those, and just wanted your comments. Thank you.
Right, sure thing.
Define it.
An ETF is an exchange-traded fund. So this is kind of a basket of stocks and or bonds that might, they'll have a particular, just like a mutual fund. I can buy it that may be a sector play, it may be an asset category play. So, you can get an S&P as an example in an ETF. ETFs typically are going to have less fees involved. They trade more like a stock, so you can do intraday trading, meaning that when the stock market is open, you could go and sell your ETF or buy your ETF, as opposed to an open-ended mutual fund, where when if you want to sell and get out of it, you can place the order, but it doesn't actually close until the end of that trading day. So you don't know. Like yesterday, a lot of people were wanting to dump positions, and the tough part is not knowing, and even if they see the market's going down, they're saying, I want to get out. Well, they're still stuck riding through that bad day. All right, so that's one of the downs, some of the trade-offs, we'll say, between the two. Now with ETFs, the other part of it is how you got to look at whether they're managed or not managed, whether it's an index play, whether it's, in other words, passive management means I buy these stocks and I hold them and I don't change it. And that's typically the way it works, but you can have some that are actively traded where there may be some things swapping in and out. So that can throw off, if you're looking for a particular sector, this can throw you off as well. There's some other things with ETFs that have to do with liquidity, and that can also play into it. One of the things that came up in this call that would be interesting to understand too, again, and by the way, before I change this, on ETFs, look at index funds, institutional funds. This is a way that you can maybe catch those same kind of plays as the ETF, but in doing those, you're going to have maybe lower, still low cost, but have some other flexibilities in there that may be attractive. So one of the things that you also look at when we're talking about within mutual funds and what can happen, when you mention that about certain stocks all of a sudden become a value. Imagine on mutual funds that these funds own a bunch of companies. If people panic and start selling their funds, the companies have to raise money. They don't have enough cash to liquidate, right? So to do that, they're going to have to start selling stocks. So that's how sometimes a stock price can get driven down below its value and become something for someone that's out there with a side account that's, as we talked about, more like a hobby thing.
Good grab.
That could say, yeah, here's something undervalued, and that may be how it got to be undervalued.
You talk about the main things, bonds, stocks, cash, currency.
Sure, cash a certain amount.
But and this is probably not what you're referring to, but I've heard talk, and I get the sense that there's something kind of fishy about it all. Investing in foreign currencies.
Right.
I know that right after this current administration cut this deal that's still in discussion in Congress with Iran.
Sure.
And people are saying, well, let's go invest in Iranian currency. I forget what it's called. Buy it now, and then once all of a sudden they start pumping out this oil because the embargo's gone, their currency values will go way up, and then after you've bought this all right now low, you can sell that currency back at the new rate.
Right.
I don't know if you've ever heard any of those, and it just sounds to me like there's something maybe kind of fishy going on there. I don't know.
With currency, it's the same. I mean, I can go and let's go to the horse track.
Okay.
Right? Let's go to the casino and put it all on black. I mean, right? It's about the same thing. It's not investing. It's a speculative play. It's a gamble. It's a bet. It's a bet. I think this might happen. And it's like these things. I'm watching the roulette wheel. Wow, it came up black 3 times in a row. It's going to come up red. I'm going to put everything on red. I mean, it's really not much different in terms of how these things work. Now, there are those out there that may study these things and they may have, more, let's say, like handicap on a horse, more knowledge about it. Yeah. But guess what? It's still going to be a gamble. All right. It's not that anyone knows which way it's going to go. Now, if I own a well-diversified portfolio, guess what? I've got currency in there. I've got precious metals in there. I own companies. It's
already in there. Yeah.
Exactly. I own the companies that are using those products, or that are bringing it out of the ground, or that are putting it into manufacturing. They have foreign holdings, so I've got currency exposure in that. This is one of the things I think yesterday with those companies that here domestically that maybe had a lot of exposure in China already got nervous, and that may have been some of what fueled the volatility yesterday.
Okay, so as it stands now, and this is our final segment, then we've already seen this morning signs of it possibly rebounding a bit. And so I guess that's the question for folks. After what we've seen the last few days, do you think we've seen the end of the depths of it, or do you think there may be another spike going down? And if you would also touch on what significance the value of a barrel of oil is to all this, which I guess dipped below $40 a barrel for the first time in quite some time.
Yeah, oil can have a, this goes again, if I've got a well-diversified portfolio, I've got my energy sector is covered as well.
I like the low gas prices, Hank.
There we go.
Okay, so at least I'm getting that, but that affects my portfolio.
Well, and on the one hand, though, think about, low fuel costs is just, we can look at a number of things with low fuel costs. One of the things is, sure, if any product brought to market has to use fuel in some way, whether it's transporting it or if it's in the manufacture of it or whatever it is, they're using fuel.
Yeah.
So therefore, if that cost goes down, that's a big plus for their bottom line. So is it a negative to your portfolio? Not necessarily. Okay, it could be a plus in there. So here's one of the examples I use when we talk about the volatility issue. So if I own airline stocks and I own oil stocks, what happens when fuel costs are low is that it's cheaper for the airline to buy the fuels they want, right? So that means they're going to be more profitable. So if I own both, I'm benefiting either way, and it's smoothing out that volatility again.
Gotcha.
I'm looking for those negative correlations within my portfolio.
Once again, okay, I think the number is right when it opened this morning, 380 points up pretty much right off the bat.
Right.
You take that as a good sign. Was this to be expected? I know asking anyone to predict what's going to happen is ridiculous, but is this going to stay with us for a while?
I would say volatility is going to stay with us for a while, and that's the unfortunate. If you look back even over the last 12 months, there's been a lot of volatility.
2015 has been a lousy year for the stock market.
Absolutely, sure. A lot of volatility, and up until let's say in the last week, it pretty much was at a break even, and then all of a sudden we've really had more down than up. So whether this is going to start raising above, I can tell you, like on the S&P 500, one of the highs that we're testing seems to be around 2100. So it seems to break above 2100 and then it'll dip down. Now this time it's dipped way below, which is more of a concern. So I don't know if what we're seeing today is it's starting to climb back, or if this is just going to be a little bit of a bump and we're going to head back down again. But again, if you're properly diversified and if you've got your income, you got a plan in place. What's my needed rate of return? How do I put my portfolio to get that needed rate of return? Do you even know what that is? If you can't answer these kinds of questions, what's your standard deviation? Where do you fit on the market with sufficient
there's
frontier?
There's actually no one watching right now that can answer that except maybe Taylor. Well, I'm just saying, because I know I can't. Now, I have people that I trust that help me set up my diversification that have handled that.
Well, and this is what we do. We go through, with my clients, I go through and I show them why these are important, how it fits into their portfolio. So, yeah, they may not retain 100% of that, but we also do regular reviews.
Yeah.
So we check in on a regular basis. This can be as much as quarterly, but definitely no less than annually, that we check in, we do a review. How is our plan holding up based on our projections? Do we need to tweak it in any way so that we stay on course?
Yeah. The main thing, though, is stay the course. Don't freak out right now.
Absolutely.
Yeah, especially, maybe some of these folks that really are messing around in some of the more fringe of the market could be worried. But if you're like most of your clients, or like myself, just kind of stick with what you've got going.
Look at your portfolio, make sure you're properly allocated, and then, have some peace of mind.
Before you run, let's give out the number and talk about the book real quick. Just say that. We've got Hank Parrott's number, and of course you know him from the financial retirement report on Friday. But if you call, what did you say, the first?
Yep, number is 615-376-5325. Get that. We'll send out to the first 10 callers. I'll send you a copy of my book, 7 Steps to Financial Freedom in Retirement. And we'll also give you an opportunity. I'll send you out a document checklist if you'd like to come in and get an investment analysis. Again, we were just talking about how much I normally charge. First 10 callers, no charge.
That's awesome.
We're going to put it on Nick. I'm going to send him the bill.
Yeah, that's fine. Fine. You got the number there, and in case you didn't catch it, we're going to take a break. I'll be back after I say goodbye to Hank, and we'll throw the number back up there. So get a pen and paper, and we'll put it up there. Hank, as always,
thanks,
a
Nick.
pleasure, my friend. An education every time you come on. I really appreciate you joining us.
You're welcome.
And of course, make sure you join him for the Retirement Report every Friday. I'll be back with a programming note right after this. Stay with us.